There was an article I just saw that said CIPS, the Chinese cross interbank payment system, which is a SWIFT competitor, 35,740 transactions last year for 17 trillion in business. Chip, 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 chip away, chip away, chip away, chip away at the settlement status of the dollar. Chip, 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 chip away at the reserve status of the U.S. Treasury. Sell them and use gold and oil and silver and rare earths and commodities, Zoltan Pozar, instead of U.S. Treasuries. This is something that the Chinese and the BRICS nations, I think, are masterful at understanding, and the tactical and methodical way that they are doing it. Slowly turning up arbitrage, exchange for physical, drain the ETFs, sovereign wealth funds. I mean, they're doing this, and they definitely have the upper hand in these commodities because they are being remonetized across the globe. It just hasn't hit the collective consciousness of the West. And so, yeah, they do have the upper hand. And maybe that's why Bill is saying what he's saying. Maybe that's why we've seen gold break out of the 12-year consolidation cup and handle. It's broken through. Does it keep on going? Maybe it will. But yeah, they 100%, I think, are controlling the price of it. And just look, every time they hit it, bang, it's right back up. That is got to be very disheartening if you're the ones trying to hold it down, because now these countries we're playing right into their hand, using the suppression against us to stand for delivery. So yeah, it's happening and it's accelerating.
In a recent discussion, Andy Schectman delves into BRICS nations' strategic plan to reshape the global economy. With India and China leading the charge in accumulating gold, Schectman reveals gold's emerging status as the BRICS currency, displacing US treasuries. This shift, coupled with increased gold transactions on the Shanghai Metals Exchange, signals a gradual erosion of the dollar's dominance. As BRICS nations repatriate gold and prioritize commodities over treasuries, Schectman predicts a significant paradigm shift, challenging traditional Western economic dominance.
I think that right now, and I don't know how much silver. I mean, India is accumulating the crap out of it, so is China. But to me, right now, gold is the BRICS currency right now. And I think that it's really important for people to try and understand this for a minute, that they don't have to issue this common settlement currency right away. They will, I think, because, look, what's happening as more of these BRICS countries are paying for oil and gas and other commodities in their own currencies. Those currencies are now being recycled into physical gold and not being recycled into U.S. treasuries. And so that's the interesting thing here, is that this is why I think you're seeing the countries repatriate their gold from the New York Fed. Way back when we talked about it being the German Bundesbank, Austria, Hungary, Turkey, Poland, the Czech National Bank, they all repatriated their gold. But now we're seeing the African and the Middle Eastern countries repatriate their gold because it is being used as a settlement tool. They settle the trades in their local currencies, and then they are using gold in place of treasuries. Or in the case of any countries doing business with China, think of all of the gold. Remember I said over the last 2 months, the amount of gold transactions in the Shanghai Metals Exchange has increased 200%, that and the futures exchange outpacing the COMEX. We're seeing all of these exchange for physicals that are being delivered to the COMEX vault in Hong Kong and then trucked over to the Shanghai Exchange. So when you talk about China buying wheat from Russia in yuan, or soybeans from Brazil in yuan, or oil from Saudi Arabia in yuan, they are all immediately convertible into gold on the Shanghai Gold Exchange. The chipping away of the settlement outside the dollar in local currencies and the conversion into gold instead of treasuries is having a big effect. At the same time, they are selling treasuries. Who is going to buy our treasury? And when you talk about Project Mbridge, which is the cross-border payment system that was developed by United Arab Emirates, who just joined BRICS, and Hong Kong and one other country, maybe Singapore. I find it very interesting that these countries, in my mind, like the biggest airport in Iran was China won the contract to modernize it. They're paying for it in oil. So I find it interesting that, to me, I would add oil to the equation, gold, silver, oil, because they're being remonetized. And when you talk about the Project Enbridge, I find it very interesting that the first two trades that we've seen, cross-border trades last year, the first one was in October of 23. It was a crude oil transaction using the digital yuan. And the second one was 2 months later, in December of 23, the first ever cross-border gold purchase using the digital yuan. So these countries are sidestepping SWIFT. In fact, we just saw, there was an article I just saw that said CIPS, the Chinese cross interbank payment system, which is a SWIFT competitor, 35,740 transactions last year for 17 trillion in business. Chip away at the settlement status of the dollar. Chip away at the reserve status of the U.S. Treasury. Sell them and use gold and oil and silver and rare earths and commodities, Zoltan Pozar, instead of U.S. Treasuries. This is something that the Chinese and the BRICS nations, I think, are masterful at understanding, and the tactical and methodical way that they are doing it. Slowly turning up arbitrage, exchange for physical, drain the ETFs, sovereign wealth funds. I mean, they're doing this, and they definitely have the upper hand in these commodities because they are being remonetized across the globe. It just hasn't hit the collective consciousness of the West. And so, yeah, they do have the upper hand. And maybe that's why Bill is saying what he's saying. Maybe that's why we've seen gold break out of the 12-year consolidation cup and handle. It's broken through. Does it keep on going? Maybe it will. But yeah, they 100%, I think, are controlling the price of it. And just look, every time they hit it, bang, it's right back up. That is got to be very disheartening if you're the ones trying to hold it down, because now these countries we're playing right into their hand, using the suppression against us to stand for delivery. So yeah, it's happening and it's accelerating.
Continuing the discussion, Andy Schectman offers a sobering assessment of the US economy, highlighting the deliberate shift by BRICS nations away from US treasuries towards commodities like gold. Criticizing US fiscal policy and geopolitical strategies, Schectman warns of the consequences of excessive debt and political turmoil. As silver sees a significant surge since February, he urges viewers to recognize the broader implications of these market movements.
I think it is happening already. That's, to me, why the bond market, why rates are staying up and why gold is going up. It's slowly happening. They are selling treasuries and buying gold. They're putting a floor under the price of gold. And this is why interest rates will continue to rise as these countries continue to shun our debt of any duration. Who the hell would hold a 10-year treasury by the U.S. government, who's addicted to spending, who will not get their fiscal house in order, and is going around the world sanctioning countries in a hypocritical way? How can we tell China, listen, we're okay? Janet Yellen says, if you guys are friends, you and Russia, well, thank you, Janet. That's nice of you if I were them. But you give any money to them for their war machine, we will sanction your companies, your banks, and Beijing itself. Don't think about the fact that we've given $200 billion to the Ukraine with no congressional oversight. That doesn't count. We're the world reserve currency. Who is broke and insolvent and borrowing money to borrow around the world, or just to pay the interest on our debt? So yeah, I think it is happening. When the Congressional Budget Office says by 2031, 100% of all discretional spending will have to be borrowed, which includes military, we're in big trouble, because all of the tax revenue will go just to pay interest on the debt and mandatory entitlement. Medicare Part B is over $90 trillion in the hole, and Social Security 77, and Medicare Part D 22. I mean, we're past the point of return. So this is why I keep coming back to their finding a villain to do this for them. And geez, when you look at the idiot Jared Bernstein, the lead economic advisor, I'm sure everyone's seen that video by now. It's hard. You have to wonder, are they just stupid, or do they know what they're doing and put these stupid people in the place of power to do what they're doing? Modern monetary theory, signing executive orders to go green, weaponizing the dollar, letting the country fall apart, opening the borders, questions of the election, questions of the judicial system. The whole thing's just a you-know-what show, SH blank blank show. And it is. So At what point does, I think, and the person who asked that question, think about it. Would you want to buy a 10-year treasury if you were one of these countries, especially in the Southern Hemisphere? These are the countries that own the majority of our debt. Now it's mostly owned by the Federal Reserve, the United Kingdom, Ireland, Cayman Islands, and China and Japan. And so they're all starting to slowly get out. China's down to 750 billion or so. They had 3 trillion. They are slowly getting out. But if they got out too fast and tried to buy all the commodities, they cut off their nose to spite their face. They are strategic. We are not, and that's a problem. There are no happy endings when this country and our government has lived way beyond its means for generations, and these actions have consequences. And look, the way that you get ahead, if you believe in Austrian economics, is to produce more than you consume. We don't produce anything; we consume everything. We're massively in debt, and we're going around the world telling people what to do, and they view it as wholly hypocritical from a broke, insolvent, in terminal decline country. So when you ask these questions, this is a once in a generation Rubicon that has to be crossed. I wish it weren't. I wish we weren't in this position. But yeah, if you want to stand up to 5-century Western hegemony, you better have your ducks in a row militarily. All the shipping lanes, the commodities, all the countries, GDP, population, all of it. And they're doing it the right way. And I think there's too much emphasis put on the common settlement currency. It will happen. I mean, it may even happen sooner than people think. Sergei Glaziev has told us that forever. We know what it's going to look like. But until then, it's just as damning without as much attention to settle in local currencies and to use gold and oil and silver and commodities in place of in place of treasuries, in an environment where the treasury market is going to face an uphill battle with rising rates, and commodities seem to be the name of the game for this next cycle. So yeah, I think it is one of these deals, and that's why I use the little by little by little by little by little, then bang all at once. You can all see the little by little, can't you? I mean, ask yourself, do you not see the little by little all around you, here and abroad? When the all at once happens, which will freak everyone out how fast the all at once happens as you're going over the cliff, you'll all know at that point what the little by little was, and you'll tell I saw, didn't you see this? I saw, I've been telling you. And the fact that you have reluctantly prepared for all of these years. Don't wish for it. But when you talk about how well it looks, silver's up 40% since February. I mean, it is moving, right? And it when it really starts to move, that's when we should all be a little bit concerned about what the bigger picture truly is. Why is it moving is really the bigger picture.
Thanks for watching. Today, we explored the strategic shift in global economics highlighted by Andy Schectman. BRICS nations like India and China are accumulating gold, moving away from US treasuries. This shift affects interest rates and gold prices, emphasizing the importance of staying informed. If you found this discussion valuable, subscribe, like, and share your thoughts in the comments below.